morning to all traders and welcome to this week's market insights video provided to you by Orbex. It's Wednesday the 26th of February today, and we'll talk about metals and energies. I will talk about gold, silver, and also crude oil, WTI, as well as natural gas. We talked about all those over the past few weeks, and with the surge in the gold the other day, owed to the usual suspect, of course, the coronavirus, it's very interesting to see what is going to happen with the gold. Of course, everybody knows that this incredible rise to the 7-year high in gold was mainly due to safe haven flows owed to the coronavirus outbreak spreading now in many countries and against everybody's thought and everybody's hope, let's just say, that the coronavirus worst were already seen. No, this is not the case. We have not seen the coronavirus worst. That's why oil market is falling, and that's why safe havens are going up. This is purely on gold, right? This is purely a pullback as a profit take, nothing more than that. Do not think that the gold is going to turn bearish now. The safe haven seems to be the only choice when we consider that the Japanese economy is doing actually bad as well. Now, with that being said, if we look at this ascending channel over here, right, we pretty much took out this top trend line over here around 17, just off the 1700s, and that seems to suggest now we're going to go into an ABC correction, and from here anywhere actually between this area we should start again looking for prices to move higher impulsively. Now we are looking at waves 1, 2, 3, 4 and 5 done. I'll be honest, I don't like this wave 5. It's very short compared to wave 1 or wave 3. So with that being said, and not just to go a little bit further out, if this is wave 1 and this is wave 2, this is 3 and this is 4, then wave 5 could really extend higher, and we could go to the 1741, which is the 100 Fibonacci extension of this move to the upside, and at the same time this is also the 78.6 Fibonacci retracement of the longer term. Let me show you here of the longer term move, right? We're talking about here now, which is like 2011 move, okay? From there to there, we are here at the 1728 at the 78.6 Fibonacci retracement, okay? So this is likely to be the next level to the upside to be taken. Now, let's have a look at the oil quickly, and then we will look at the silver. We talked about the WTI having another move to the downside, right, to take out the 78.6. This is still the case. We have an ABC, if of course this turns out to be a triple zigzag, okay, to complete wave 2 and then move to the downside. Or we also talked about the possibility, since there is no interaction between the waves, that this is an impulsive move to the downside, which means we had a W, X, and Y, just a complex zigzag, and we're moving now impulsively with waves 1, 2, 3, 4. We're going to take 5, then we're going to see a short correction to the top of the bottom of 1, which would be the 57.5. That would be the maximum, of course, and then we should start looking again for prices to move lower, right? So I'm expecting in the short term oil to move lower to the 47.30 as a first stop. Now, let's go quickly on silver, and then we're going to close with natural gas. We talked about silver being also in some sort of corrective pattern, right? We had ABC here, ABC with an X and the Z. With the current move to the upside, right over here, and I was actually looking at this to be the case, I see this as a flat now, okay, as an expanded flat. Or it could be a running flat, okay? We crossed above that level, we had ABC, ABC, and now we're gonna go down for an ABC for 1, 2, 3, 4, 5. Now this move could be a running flat and end around this level, right, around 1750, 18 or so, or an expanded flat, which could be a very good scenario, considering that the extension takes us to 1634 and 1639, excuse me, and 1634 is also the Fibonacci retracement of wave 3. Which makes this a very, very good scenario, because it's also below the previous low W, and that would make this a very respectable zigzag pattern, as wave Y would actually move below wave W. And last, natural gas. We talked about this last week as well. We talked about this being an impulsive move to the downside, okay, and we talked about expecting that to move a little bit higher. I didn't see this as the end of wave 5. I see this as end of wave 5, and that actually seems to be, the current structure seems to be suggesting that this might be the case, because we'll have a very nice bearish divergence signal both on the MACD and on the RSI. And that indicates that there should probably be more downside. Now, we're either going to get a 1, 2, 3, which is a very, very short correction, and then we'll go for 1, 2, 3, 4, and 5. Or we're going to get an ABC for an X, another ABC to take out the 38.2 Fibonacci at 2.15 or so, and some sort of more respectable, let's say, correction, and then we're gonna see wave 5 being completed. Now, after this level, okay, after a false break is created below this previous low, I'm seeing the markets surging higher.